Hey everyone, on February 24th, I made a video answering if Sentinel One stock was a buy, hold, or a sell. And in that video, I said it wasn't a good time to buy Sentinel One stock. Since then, Sentinel One stock price is down 27%. So if you avoided buying Sentinel One stock as a result of that recommendation, you saved some money. So what I'm going to do in this video is update that recommendation. I'm going to evaluate Sentinel One stock again, especially considering that it's down 27% since my previous recommendation, and answer if it's a good time to buy the dip. If this dip makes Sentinel One stock a buying opportunity, if it's down enough for me to upgrade that recommendation. So let's jump right into it. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. Alright, so like I mentioned, Sentinel One stock is down 27.19% since February 24th when I made this video here answering if Sentinel One stock was a buy, hold, or a sell. And in this video, I said it wasn't a good time to buy, and if you already owned it, to hold on to it, but don't buy new shares. Now, if you already owned it and you held on to it, unfortunately, you did still lose those funds in the last month or so. Still, if you didn't buy, you could potentially have an opportunity to get in here at a better valuation. So let's evaluate Sentinel One stock again and answer if it's a good time here. So starting with its revenue, looking back 5 years at its trailing 12-month revenue, 621 million in the most recent trailing 12 months, up from around 100 million in July. Now, its revenue growth rate is decelerating. Revenue growth in the latest quarter was down from the previous quarter, and management is forecasting revenue growth for its fiscal year 2025, which is going to be even lower than before, a little north of 30%. So interesting deceleration in revenue. And then longer term, the company did mention upside from its AI offering. Its offering in AI is going to make it easier for security analysts to use its software, and management thinks that's going to be a tailwind for it longer term. Still, in the near term, it's expecting revenue growth to decelerate to the slightly above 30% range. Now, analysts on Wall Street that are following Sentinel One stock, they think that its earnings per share is going to grow robustly over the next 5 years. They expect Sentinel One's earnings per share to grow by 40% each year on average for the next 5 years. Now, the company is not yet profitable, but the analysts on Wall Street expect Sentinel One to become profitable relatively soon, and then from there to expand profitability robustly over the next 5 years. The cybersecurity industry overall is still growing and is expected to grow not only for the next decade, but probably for several decades. The more and more we spend our time online on electric devices, the more and more cybersecurity needs increase. So the industry overall is growing, although near term, there are some headwinds industry-wide. The growth rates are slowing down, as evidenced by Sentinel One. Competitive pressure is increasing between providers, whereas previously there was very little competition between providers because there was so much opportunity to expand that they didn't need to try and take market share away from each other. Now I'm noticing more and more competition in the industry, which is not good news for any of the providers, let alone Sentinel One, one of the smaller operators in the industry. I mentioned the company wasn't profitable. It's also not positive on cash flow from operations in a trailing 12-month basis, but it is improving. Its trailing 12-month cash flow from operations to sales increased to negative 11%. That's up from around negative 75% in early 2021. So it's making progress towards becoming positive cash flow, but it's still not there yet. But what I like to see, and I don't always need to have the company be positive in terms of profitability or cash flow from operations, but if they're demonstrating progress towards profitability, progress towards cash flow positive, I like to see that, and I am definitely seeing that with Sentinel One, and especially considering that it's growing sales north of 30%. it's not surprising, or it wouldn't be surprising to me if it turns positive in this metric over the next 3 to 6 quarters, I would say, given its current trend line here. And finally, I wanted to look at its valuation. And measuring by the forward price to earnings ratio, Sentinel One stock is trading at a forward PE of 75.5, which is considerably expensive, especially when you compare it to the average stock in the S&P 500, which is trading at a forward PE of around 17 to 20. Sentinel One is more than 3.5 times more expensive than the average stock in the S&P 500. That being said, Sentinel One's earnings prospects are roughly 4 times that of the average stock in the S&P 500. However, its historical profitability and cash flow from operations are not great, and the revenue growth is decelerating, followed by the fact that increasing competitive pressure could slow its revenue growth even further or hurt its expansion towards profitability, one or the other, depending on what management chooses. If management chooses to fight the competition and offer better deals, then it could hurt its profitability, but its revenue growth will remain. If it chooses to protect its revenue growth and market share at the expense of profitability, then it can be lower profit margins, but continued revenue growth. When competition increases, something needs to be sacrificed, because now your clients that are looking at cybersecurity offerings to purchase, your rivals may have a better deal available, and if you're not willing to match that deal, you're going to lose that sale. If you match that deal, however, you might lose your expansion and profitability. So that's why I always say increasing competition is bad news for investors, regardless of who comes out on top. In the near term, it's bad news for investors, and it could take a while before the competitive pressure eases, before everyone concedes, or before the industry decides who the winner is and everyone else backs off and allows the market leader to take the market share. Before that settles out, which can take a while, there's going to be many difficulties in the space when competition is increasing. Now, the good news is that the competition is not extremely fierce right now in cybersecurity. It used to be pretty much, I would categorize it as very, very light, but now it's moving towards becoming more intense. But it's still not as bad as industries like electric vehicles, right? Where it's in an ongoing price war for over a year now, and that's hurting profit margins for almost every provider. It's not there yet, but it took a step in that direction. And so that's something I'm a little bit cautious about, especially when I'm looking at a valuation like a forward PE of 75. I wouldn't want to pay a forward PE of 75 for a company with these characteristics and with that direction in competitive pressure. So all that being said, to update my Sentinel One recommendation, which I last updated on February 24th, like I mentioned, I had it as a hold, or expecting that it would perform along the lines of the market, however the market performs. I'm keeping it rated there, and I'm updating it today, February 15, 2024. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.